Associate Editor of Financial Services at Capital Brief, Andrew Cornell, is going to be hosting this panel. Joining him is Anish Sinha, the co-founder and COO of Upcover, Australia's fastest growing insurance platform, now trusted by 50,000 plus small businesses, fintechs and scale-ups. Before founding Upcover, Anish was an early hire at Sequoia-backed services marketplace platform in India and helped scale it to 10 million users. Mate, I love that flexibility. How were you not on the Olympics with skills like that?
Oh, that was a terrible performance.
And the ever so athletic Dan Howard. Sorry, mate. Pull it back. Right, good. Up, Unloan. I love Unloan. I have to say, I go on Unloan all the time just to check the interest rates and thinking, oh God, do I really want a 30-year mortgage just so I can keep saving a point every year? But it's an amazing business, an amazing product, and he's going to tell you more about it because, of course, it's part of X15 Ventures, CommBank's venture scaler. And from there, we've got Laura Falconer, who is the Portfolio Director at X15. As I said, the venture scaler powered by CommBank. And I think there's a few others from X15 powered companies in the room, or certainly at FinTech, at Intersekt this weekend. Oh God, I really am getting to the point where I'm losing it after a day and a half, aren't I? Guys, take it away, start some controversy, you know, tell us about how brilliant corporates are. Over to you, Andrew.
Look, thanks very much and welcome everyone. It's always hard straight after lunch, but we'll attempt to satisfy your hunger on another level. My name's Andrew Cornell. I'm the Financial Services Editor of Capital Brief, which is a startup as well. And so covering fintechs is quite close to my heart. I also had to bend my own knee to a corporate for a few years after the Financial Review. So I have some sympathy and a limited perspective, but my panellists here today are vastly more experienced and vastly more useful to you in that regard. We've sort of roughly been through their bios, but Laura, Portfolio Director of X15, has a background going back to launching the Generator, the flagship entrepreneurship program at Monash Uni. She was also at a medtech accelerator, the Actuator. Dan, CEO of Unloan, digital home loan provider. He was also, although he says this is almost the same job, entrepreneur in residence at CommBank. I've never heard of an entrepreneur in residence at a bank, so good on you. And he was Chief Information Officer at realestate.com. And Anish is the co-founder and Chief Operating Officer of Upcover, which is Australia's fastest growing insurance platform, used by over 50,000 small businesses. But rather than waffle on with the formal bios, I thought I might get each of you to give us a sort of brief opening, not so much around what your company does, but about something that stood out in what you're doing, something that pertains to the subject we're talking about today. So maybe, Dan, we start with you and then go down to Anish and Laura.
Tell me the question again. I'm a bit slow today.
An introduction to you,
yeah,
and what you're doing,
okay,
but also more to the essence of how it works with X15, with CommBank.
Yeah, great. Okay, so I've been on both sides of the fence. Thanks for the intro. So, previous corporate role was over a decade ago now. That was at realestate.com.au, fabulous company, digital native. I had the privilege of joining when it was already a #1 in the market, so I can't claim any credit for that. But it was navigating basically going from a sales-led organisation to a product-led organisation. So lucky enough to work with a lot of technologists, brought out the mobile apps for Android, iOS, modernised the website and sort of got us, helped get realestate.com.au, a very small part into its fantastic position today. Definitely don't want to overclaim credit on that. It was over a decade ago. But since then, I've been in startup land, and it's been a very different journey. And I've had to sort of relearn all the way from my first startup, which I was quite lucky to sort of get out with just washing my face on the funds put in. We sold it for pretty much what we had put into it. So it was a face-saving learning exercise, but very valuable learnings. Then did another startup that we exited to Domain, captured about 20% of the real estate agent market for inspection. So that was putting those learnings into practice and actually getting some real market traction and generating some real value that an ASX leader thought was valuable enough to acquire. And then on the back of that, was having played so long, in prop tech around the area of financing home loans, decided it was finally time to figure out how to play a part in financing home loans. At that time, there was very little digital activity going on around the home loan. There are some in this room who've done an excellent job starting that journey as well. And I had decided to partner with CommBank to achieve that. And at the time that I started, X15 had also started. And so we were going on a learning journey together. Me, in terms of trying to figure out how to run a fintech within a bank, and working alongside X15, as it worked out, how to make it easier for people like me to run a fintech within a bank. So it was a double learning experience, and here we are sort of 5 years later, well into it, a few $1 billion in home loans, which is fantastic, and looking for the next phase of our growth.
Well, thanks, Dan, and that relationship's exactly what we're keen to explore as we go on in the panel. But Anish?
Thanks, everyone. So Upcover operates in the commercial lines insurance space. As you know, insurance is split into personal lines and commercial lines. Personal lines is your home and motor insurance, which are largely digital products. All of you buying products online would be able to do it at the click of a button. Doesn't really happen with business insurance. There are 3 million business owners in Australia, and 90% of all business insurance is transacted offline, intermediated through brokers. Upcover exists to enable and empower business owners to be able to buy these products all online. You could be a fintech, a startup, scale-up, a VC. All of us are business owners in one right or another. And the genesis comes from my co-founder, who's really the domain leader. She's the CEO of Business Sky. I met her 5 years ago. She had left Zurich Insurance. She cut her teeth in small business insurance, spent 7 years there in underwriting, pricing claims, and really felt that products created in the business insurance industry weren't really created in conversation with business owners, but rather brokers, because the brokers are the sales machine for the insurance industry. And so how do you create a product where not a single business owner is consulted, but still everyone is forced to buy one? And so that's what we're trying to change here. Upcover exists so that we can create digital products, enable businesses to buy these products online. We work with 20 insurers and underwriters from across the world to bring the best of the breed products to the Australian business owners. And yeah, as Andrew said, we're up to 50,000 business owners. We're loved by them. And we're looking forward to becoming the largest transaction platform for commercial insurance in Australia.
Thanks very much, Anish. And Laura?
Thank you. So I am the portfolio director at X15 Ventures, which means that I look after our build, buy, and invest activity, as well as how do we help our ventures scale with CommBank Advantage. Before I joined X15, my background was not in fintech at all. It was like medtech and deep tech. But everything was about helping founders find that pathway to scaling their opportunities. And when I came to X15, so much of what X15 is all about is getting that groundwork in place so that you can tap into the innovation that early stage opportunities bring while bringing the safety and the distribution scale of a large corporate partner like CommBank. I've found it very fascinating coming up the curve on that journey, and we don't always get it right. I think Unloan is an example of where we've had a lot of learnings along the way and have gotten a lot of things right. There's also examples where we got it wrong. We built a business in the early days that was focused on how do we take some of the data and insights that small businesses are generating and turn that around into useful intelligence for how they can optimize their businesses. For a whole bunch of different reasons, it didn't work, but really the steel thread of it was around timing. That opportunity came to fruition, adding a value proposition that is quite similar to a lot of the value propositions that we're seeing today with AI, but it was before those patterns really existed and before we understood how to commercialize that type of value proposition. It was also too early in terms of the bank. The bank didn't know how to work with an early stage proposition in that way at that time. A lot has changed since then with significant tech modernization, with DevSecOps, bringing agile workplace, working practices into the bank. It's a completely different story now. And then the third was that X15 was too early in our journey. We didn't have the patterns and the processes and the understanding of how to help that opportunity make that transition into embedding that value proposition into the bank. And we made some incorrect choices, for example, around technology that just made it infinitely harder to do that. Thankfully, we've learned some of those lessons along the way, and we do things a little bit differently now, which means that we can have successful partnerships.
It's fascinating to hear that X15 has had to evolve, in a way mirroring some of those startup journeys. Now, it is a provocative title to this session, Bending the Knee to a Corporate, and we've had a few discussions beforehand and people have said, that's a bit of a dodgy title. For the purposes of this session, though, we're thinking of it in the medieval sense, that you have to pay allegiance to a lord and that you're subservient to the lord. So I'm sort of curious to know, is it a relationship of subservience, Laura? How do you see? And we've got a really good spread on the panel because Laura's obviously a funder, Dan works within X15 with Unloan, and our niche is quite distinct. So we cover the whole spectrum here. But maybe we'll start with you, Laura.
Yeah, there's actually a couple of lenses. The first is absolutely not the subservience piece, because if your venture lives and dies on strategic partnership with me and CommBank, like that's super dangerous for both of us. You shouldn't have all your eggs in that one basket. And so you should have multiple opportunities for growing and scaling your business, and whether this partnership works or not should not be fatal to either one of us. So in that sense, no. But also, there's a lot of things that in order to work with a highly regulated entity like a bank, you just have to do. There's lots of mandatory reporting and must-dos that we have to have. And if you don't have the capacity or the culture to lean into that commitment, then the partnership's not right on both sides.
Anaish, you haven't chosen that route. Is there a particular reason that you've chosen not to have such a deep partnership with a corporate?
I think we partner with corporates. We exist because we underwrite off the borrowed balance sheet of insurers. So we wouldn't be around if we didn't have absolutely amazing insurance partners, and we work with now 20 insurers and underwriters. We literally borrow their balance sheet so we can offer these products on our platform. So we work very deeply with them. I think the way we've navigated is not to bend the knee or not to be subservient, but to essentially try and emphasize that we are the ones who understand the customers, are closest to the customers, so we know what the customer wants. And at the end of the day, your job is to select risk, and our job is to make sure we surface a variety of risks so that you can run your business and ensure profitable underwriting, which is what you're optimizing for. I think one of the key things we have realized in our journey, and we've kissed a few frogs along the way, is to make sure that we absolutely understand what the organization is incentivized to do and what the person and the decision maker is incentivized to do. Because different organizations have different incentives, but you'd be surprised how different people in the value chain might have different incentives as well, and to know what makes them tick will help you in your decision process. So that's how we've navigated and made sure that we've got to the outcome that we wanted. It may not always be the outcome that we hope for, and it may not happen in the same time, but that's the job as a founder, as one that's not invested in by a corporate, to make sure that we are diversifying, as Laura said. We don't live and die by one insurance partnership. We have a diversified pool of balance sheets, and we lean on them.
And Dan, you come from CommBank, but you consciously chose this pathway. Is it for you, is it a question of, subservience at all, or is that the model that works? What was the attraction of being part of that X15 sort of accelerator program?
So it didn't come from CommBank, okay, from as a startup venture. So it was a big change in culture. For me, the choice was about the industry, the market that I was trying to serve. So being in financial services, and not unlike Anisha's sort of phrase, to borrow the balance sheet. I think you said to borrow the balance sheet of others. If you're in financial services, there's two things that are exceptionally hard to do on your own. And one is have access to a low cost of balances that you can lend out typically or reinsure. And the second part is the regulatory aspects of it. So there's a lot of deeply embedded knowledge about how to work with regulations effectively, and all the sorts of patterns and reporting and good governance that goes with being successful in a regulated industry like finance or insurance. That is not something that I consciously wanted to take on as a startup. I really wanted to focus on our differentiation, which was creating an amazing digital experience and at a fantastic price point by skipping the sort of middleman distribution, going direct to customer. That was the whole idea of Unloan. What I didn't want to do was have to stand up on my own two legs on all the other things. I actually wanted to inherit a lot of that by partnering with a bank. Inherit rather than bending the knee.
Right. Look, we do want to make this a sort of inclusive discussion. So if anyone has a question, wave. I'll attempt to see you. There is a mic so that anyone can hear you if you want to ask a question. But please, anything at all that you wanted, you're better at asking these questions than me of the panel, and you know what you want. So please come up to the mic and I'll keep an eye out for things. Laura, if we had this panel 10 years ago, it would have been much more adversarial. Like a lot of the fintechs of that era, some of who are still around today, the idea was to completely take the market and the customer base of the corporate. Clearly today the situation's changed. The funding environment is one of those things, but you've come from outside the fintech world, but have you seen that evolve too, the sense of willingness to work together?
Well, I think distribution and access to customers at scale is one of the biggest challenges for early stage companies, and you can throw a whole bunch of money down Google trying to buy them, or you can get some partnerships in place that gets not just the distribution, but also a lot of other added benefits alongside that. So I think as the market shifted away from kind of growth at all costs, which meant that you had huge buckets of money to throw into acquiring on major search platforms, when that went away, I think a lot of founders had to think differently about how they were going to achieve scale. At the same time, I think corporates got a lot better at figuring out how to work with these companies. So it was multiple forces coming together. That means that I think that we've got a lot more cooperation and collaboration in market than kind of fighting.
I mean, you've touched on a couple of times how X15 has had to sort of learn to work with some of with the fintechs. Is there one, obviously there's a dozen lessons here, but is there one lesson that sort of really stands out to you?
One of the things that I raise with all of our ventures is to think very carefully around what success looks like for your venture as distinct from what success in the partnership looks like. And don't guess what your partner thinks, what you think that partner thinks that metric is. Have discussions, optimize towards that, and be really clear, because otherwise what happens is you're running at your North Star metric, they're running at their North Star metric, you're both running at different finish lines with your ankles tied together, and that doesn't work.
And Anisha, it touches on a point also. Dan's made this point. The corporate can offer things. In financial services, the regulatory and compliance burden, which is enormous for regulated entities, is it an attraction for you that someone else could take on, because insurance too is obviously highly regulated. Would it be an attraction to partner with a corporate that could do that, or are you happy to keep that distance?
No, we absolutely want to own compliance in-house. I think it's one of the strengths of a software business that's operating in a regulated environment. And Australia is one of the most heavily regulated markets for insurance in the world. To own that in-house, my co-founder, CEO, she's a lawyer. She's existed in the insurance industry, and now we have a general advice broking license for financial services. So we absolutely take compliance very seriously. I think the more we compound, the more we can continue to sell compliantly, and the bad rap that the industry gets and how low the NPS is, I think it's going to accrue and compound and work to our advantage over long term. We just got to continue to chip away at this mountain and make inroads and continue to just focus on the customer and build digital experiences. That's what we're indexed on. We're making trade-offs continuously on, is it good for the customer? Can we make it digital? And does it help the ecosystem overall? And that's how we make decisions about product and about our strategy.
And is it absolutely essential for the model that you've developed to be at arm's length from a corporate? Could it even work, your model, with a corporate parent?
It could. So we're invested in by RAC. We're not completely not part of the corporate, but they're a minority shareholder. And we've always understood our relationship with them. As Laura said, you need to know what relationship you hold with the corporate. They're, as an investor, they are not the balance sheet. We want to have separation of concerns always within the company. So we're not leaning on them for insurance capital, but then also venture capital. We are backed by VCs who are seeking a rate of return on their capital, and insurers who want to make sure we create a compliant product, we distribute it compliantly, and we do it to the highest standards of the industry.
And Dan, for you, I think the interesting thing with CommBank, they're Australia's biggest home lender. They've got an existing home loan product, a digital home loan product, a broker-generated product, a proprietary loan product, and then there's Unloan. How does the internal competition work?
So I think many of Australia's banks are used to having multiple brands in market. You'll see most of the tier 1 banks also have a secondary, or at least one secondary, often many. That's no different to CommBank or Westpac or NAB or ANZ. Increasingly too, there's sort of a bifurcation into almost 3 parts of the market, which is super digital native, sort of a tier 2 brand, and typically the tier 1 brand. So it's not something that's new to CommBank or even special. I like to think that we did it reasonably well, our job in that sort of digital native direct to customer, but there are others treading a similar path with other major bank brands as well. You also seen it in other industries. In travel, you've got Qantas, who also owns Jetstar and seeks to suit the needs of different customer segments in different ways, whilst also more holistically serving the entire market better by having more than one brand to serve those 2 distinct market segments. So it's not unsurprising. It happens quite a lot in finance. It also happens quite a lot in other industries as well.
I mean, it's a bit of a philosophical question. Can you address a bigger market with a series of distinct brands, or is it better to have everything in one brand? I mean, I know in some banks, ultimately the ambition is to sort of have the legacy product die off because it's on a legacy platform, it's expensive, maybe it's addressed at an older and ageing market, and the youth market is going somewhere else. Can you envisage that with CommBank, or does the multiple brands make sense, for eternity almost?
Yeah, I can't obviously speak on behalf of CommBank, but I can certainly speak more generally that often particular positions in brands generally have particular cost structures associated with them. So a particular price point can only be met with a certain cost structure that allows that brand to meet that price point. So of course, in Unloan's case, we're very much focused on being one of the lowest cost originators of home loans in market, and dealing direct with customers, so we don't pay commissions in the middle. And both being lower cost and direct to customer allows us to pass some of that price advantage back to customers in the form of a cheaper rate.
Anish, you're, by definition, with your model, you're dealing with multiple brands all the time. How do you think about that internal brand competition?
Yeah, it's an interesting one. We work with a lot of insurers who believe they have really strong brands, but customers don't know them. And so it falls upon us to make sure that the customers are experiencing what is a fairly commoditized product, but the buying experience is tailored to the industry. The way a beautician thinks about their business and a plumber or a tradie thinks about their business is completely different. Whereas if both of them were buying a home insurance product, they'd think very similarly. So I think there are a lot of strands that we have to navigate as we position our products. When I say our products, it's the products offered by the industry, but how do we tailor the buying journey? And how do we contextualize that sale? Because we offer these products on the upcover.com brand and platform, but we also offer them as B2B2B through any channel partner who has a loyal SME base, or through FinTech Australia for all their fintechs, and making sure that they truly understand that they're buying through a partner that understands their situation, but is also a compliant solution and has access to market-leading insurers.
And Laura, it's a portfolio that X15 has. How does, and I take your point that, it's sort of evolved the thinking of that portfolio. Ultimately, and I was lucky enough to spend a day at X15, ultimately you want something that's tailored to the bank's needs, as well as being a viable fintech in its own right. So how do you structure your portfolio to achieve that? You're obviously not doing a sort of standard VC model of going out and just saying, okay, we'll invest in 30 or 40 different ventures and hope a couple of them are 10 baggers or something.
Look, our approach continues to evolve with respect to that. One of the things that I've recently done in my team is hire up a team that we kind of call the POC squad to run at early ideas that we've got for internal build opportunities. But then we also have programs like Accelerate. Just Monday we had 20 companies come in to do a full day of due diligence to see which ones are going to be a tight match to strategic partnership opportunities with group, and then a subset of those will go forward and we'll have them on active pathway to partnership. We also invest, we also buy, so we keep our options open. We have always ongoing kind of thesis development work to really understand what's shaping the opportunity set of today and what is the opportunity set going to be in the future and what should we be doing about that today. So we kind of use a wide range of tools to make sure that we can learn and fail fast, but also get momentum into opportunities that will help shape the future of CommBank, because as you said, it is for us about strategic rationale.
Can I just add one thing? I think more founders should do that as well. Just as corporates date founders, founders should date corporates and run that process with almost the assumption that's not going to go through. And I think that will just ensure that they get a lot of experience in trying to understand what really makes the corporate or the decision maker tick. Because when you get rejected by a corporate or they decide not to work with you, it's usually the person, not the entire organization, that is saying it's not the right time. So I think it's important for founders to remember that and run that process.
And Dan, a final one for you. You all sit on, a couple of floors there at X15 in Sydney. Do you sort of look around and go, oh, they shouldn't be investing in them, they shouldn't?
Can't have favorites, no favorites.
They're all fantastic companies.
Look, I haven't seen anyone wave their hands. Have I missed anyone who wanted to ask a quick question? In which case we have, yep.
The question's actually how you find other investors, the attitude of other investors when you've got a strategic investor involved. Like, is it generally positive or negative?
Sorry, so just to make sure I understand, like, how other investors view our involvement,
not so
or
much
vice
yours,
versa?
as the investee company, sorry. Is the experience with your other shareholders improved or tainted when you've got strategic investors?
Yeah, look, I think it's really important for everybody to understand the type of investor that is on the cap table. And knowing that at the start really changes the expectations that you've got of the other investors. So X15, we invest for strategic rationale. We are not out there investing round on round for financial returns like you might expect a venture capital fund to invest. And so when other investors understand what it means for us to come onto the cap table and how we're likely to behave, it really just helps that relationship overall. We have several investments with venture capital funds, and that tends to work out just fine.
Well,
Can I also just jump in? So we have a corporate investor, but we've ring-fenced and made sure that each investor kind of understand their role. Where are they contributing? With an insurer, the expectation is really clear that we're separating concerns here. You're invested in us, not necessarily knowing that and clarifying that you don't necessarily have to back us with your balance sheet, but you're an investor in your own right with capital, and we'll be getting other investors who will be return focused. So this is not with the intent of selling out to you.
Well, Siri or Alexis or whoever it is doing this has told us that we've run out of time. But look, that was really fascinating. We could have kept going for a long time. Thanks very much to the panel, and join me in thanking the panel for a really fascinating session.
Big thank you to Andrew as well, and Parkour Dan, I'm looking forward to the dismount.